Hello and welcome back to AusBiz for the global view on this Thursday. I'm Andrew Gagan. Great to have you with us as we get across what happened on global markets overnight. Mostly higher equity-wise, but it was a volatile session on Wall Street, with the Dow and S&P closing higher after a late rally, erasing declines after data showed the US economy contracted in the first quarter for the first time in 3 years. This was ahead of key earnings results released after the bell from Microsoft and Meta. Microsoft topped quarterly revenue expectations on strong growth in its Azure cloud computing business, sending its shares more than 6% higher in after-hours trade. Revenue to Azure rose 33% in the third quarter, exceeding estimates. And Meta benefited from strong advertising performance to beat analyst revenue estimates for the first quarter, easing concerns from investors over tariff-related economic growth fears. Shares of the company up more than 4% in extended trade. Concerns about a deceleration in AI investment had been spurred earlier in the session by Supermicro Computer, which cut its third quarter forecasts due to delays in customer spending, sending its shares tumbling, along with Snapchat, parent Snap, which did not provide a second quarter financial forecast. Caterpillar reported lower than expected first quarter results on weak construction equipment demand and warned of the potential impact of extensive tariffs, while snack food company Mondelez rose after its quarterly results topped expectations. Well, the US economy contracted for the first time in 3 years in the first quarter, shrinking at an annualised rate of 0.3%. The economy was overwhelmed by a flood of imports as businesses raced to avoid higher costs from tariffs. Growth was also weighed down by a decline in federal government spending as the Trump administration embarked on aggressive funding and job cuts. And the personal consumption expenditures price index rose 3.6% compared with a 2.4% rise in the previous quarter. A separate report showing wages and salaries climbed 0.8% in the first quarter after rising 1% in the previous quarter. And on the geopolitical front, Ukraine and the US have reportedly signed a long-awaited minerals deal. The aims to further cooperation between the two countries. The deal will provide the US privileged access to new investment projects to develop Ukraine's natural resources, including aluminium, graphite, oil, and natural gas. That's according to Bloomberg. Now, the 10-year US Treasury yield rose to 4.18% in choppy trade. The 2-year falling back to 3.62%, but some 29 basis points lower across the month of April. In fact, the largest monthly drop since August. The US dollar firmed against most majors, with the GDP figures better than some had forecast. Goldman Sachs, in fact, was predicting a 0.8% contraction. JP Morgan had forecast growth to contract by 1.75%. The Aussie has risen to 64.1 US cents. Bitcoin trading just above 94,000. Oil prices, they've fallen further to record the largest monthly drop in around 3.5 years, after Saudi Arabia signalled it would produce more and expand its market share. Brent crude futures around 2% lower at $63 a barrel. Copper tumbled more than 5.5%. Iron ore down about 1% to $98 a tonne. And gold pared some losses on bets that the US Fed will cut rates after the weaker than expected first quarter growth. Spot gold down around 1/5% at $3,308 an ounce, but was up about 6% across April. Let's get more now what we're seeing stateside. Ira Epstein joining us from Linn Associates. Ira, welcome back. So let's begin then with those growth numbers. Expectations were there that the economy was going to shrink. What was of concern to you, particularly, I guess, the PCE inflation print?
Well, that's the beginning print that you have to worry about, because you're only at the very beginning of these price increases because of tariffs. Tariffs aren't going away. So it's a given that as those tariff numbers work through the economy, the PCE index is going to go up probably for the better part of a year. I mean, I don't see tariff deals coming off. I think you have the 10% no matter what, according to the president. Then the question is, it's 10 up to what number, depending on the deal that he gets done and when do those kick in. So you're already seeing companies like Teemu and Shein, they raise their prices for their very low Chinese goods, but for all purposes now, they're an embargo on them, because if you go to buy them, you have to look at what your shipping cost is now to the US. Nothing's free, everything's tariffed. The de minimis part is gone on goods under $800, so you get it there. I went out yesterday to buy a crimper for a gutter, a metal crimper. And to make a long story short, I caught one for $15, same brand, Home Depot, $42. And I got this one through Amazon, and they had plenty of the same brand in the $40 range. So you have to get lucky now and do your homework if you want to get things like that. And I think that what you have to bring up too is that while China keeps telling the world they're prepared for this tariff war, why did the factory gate number go to 49 today? Anything under 50 is contraction. That wasn't expected. So that set the copper down, that set the oil, because who's the big buyer and user of copper and oil? China's one of the biggest in the world. And if they start contracting, what is the right price for those goods?
I also see you point out there, Ira, that China is starting to pick and choose as far as those companies that it's going to exempt from those tariffs to its own benefit.
They have to, because like the United States, they don't make all the pharmaceuticals they need. We make plenty of them. They don't make all the things they need to operate certain gizmos, whatever it might be. It might be a switch. It might be something else. So as President Trump did, now President Xi is doing the same. This is a war, a trade war, where the end goal is to make a fairer playing field. It's not to wipe out the other country. And I think that everybody has to understand that and understand where this is going. It is going to be a different 4 years. When we saw the market and the win by Trump, I made that statement. I said he's going to hit the ground running. He's had all this time, a full 4 years to get ready. And I think it's just breathless as to how fast it has gone. When you look at the first 100 days, I'm not saying it's good or bad. I'm just saying what he's done is amazing.
All right, but I mean, they said that deals are in the works, but still no sign of anything concrete.
Right. He says a lot of things. You know that. Our president says one thing to throw you off balance, and then another thing happens. Until a deal is signed, until I know what a deal means. Is a deal a letter of understanding, a memorandum, some people call it, of understanding? Is it an actual trade deal? I don't know what it is, but whatever the first one is, the reason it's probably taken a little more time is when they announce it, is that the framework for other deals? And is that the guidelines, the guidepost, if you will, that other countries have to follow? Everybody's waiting. We're all in the same shoes because we don't have the answers.
So, Ira, can we make sense of what's going on in the stock market then, given we've almost erased those losses we've seen since Liberation Day?
Yeah, I think what you do is you take a look and you understand it was the Liberation Day, but it was also the bond market melt up. Remember that it really stopped working for a brief period of time, and yield shot dramatically higher to 5% on longer term dated instruments. So that combination of the two created a market panic. And when you look back at it, every day I do videos that are out on YouTube and so on. And in those videos, I have circled April 7th through April 9th when the stock market panicked. And I said, that's got all the earmarks of a possible bottom, but I think you can't make that call. You trade it as though that's it. And the market spent a lot of power getting where it's at. I'd be careful about buying this rally. I've told traders to do two things. On a rally, liquidate the things you don't want to own, and on the breaks, and we've had that opportunity, accumulate a few of the ones that you do want. And that's exactly where I think you're at. It is too soon to say we're beyond all this and the market just going higher. I am not in that camp.
What do you want to accumulate at the moment, Ira?
Doing it. Today, we tried Carvana. We were looking at it, didn't get it, but I have clients that are my subscribers. If they follow it, I can't tell you if they do or don't. I don't manage people's money. We've been talking NVIDIA for a long time. A year ago, December. A year ago, not this December, a year ago, and we've peeled a lot of it off along the way. Accumulating, and I keep telling people, Boeing. I like Netflix, have for a very long time. Uber. I like the autonomous driving, and why not buy the best of the best? So this is the kind of market that you go after that. I most certainly am not coming in new into any of the chips. I don't believe in that right here. I like Palantir. I like those type of companies. And in the futures, the question is, what is the dollar going to do? I have been telling my clients, at least recently, to buy, and we've come out of some of the Aussie dollar. That's one of the favorite trades that we had recently. And now it's up to the market. Is it going to make a run to the 6,500 level? But if it gets back under the 63.5 zone, I have my doubts that the rally keeps going.
Ira, of course, we are in the midst of earnings season. Another couple of the mega caps just gone your time, Microsoft and Meta. Look, no real effect there, it would be apparent as far as tariffs are concerned, more on the AI spend.
Well, the AI spend is everything. But what's the AI spend? Is it chips or is it software? It's a combination of the two. If you heard today Meta talk, and Zuckerberg was talking about this, prior to this, they had a CapEx spend penciled in of 60 to 65 billion. In their company, they raised it now from 64 billion as a low point to the mid 70s. So they're seeing that they're winning on all fronts with it. Obviously, Microsoft is seeing the cloud business take off for them. So I think it's now the software companies and those that have found a way to monetize what they can with AI that are the leaders in all this. And I don't think it's the hardware companies right now. And I think I'd stay away from the chip makers at this point.
Ira, always great to get your view. Thanks for joining us, Linn Associates.
Thanks for having me.
So let's take a look at where we're likely to get going in just a couple of minutes' time. SPY futures actually negative, despite what we saw on global markets overnight. That may turn though, but currently off by 1/3%. Stay with us. We're going to get right across it in just a couple of minutes' time.